Hello and welcome back to Bunnex Investment Group. In this video, we are going to be talking about trading in line with the market makers. So, are you someone who has been struggling to find where the market is going? Of course, all over the internet, there are phrases like trade in line with the trend, but after getting into the market, you'd see the market actually making a reversal. So by that, you are usually trading against the market makers. So firstly, who are the market makers? It's those guys who have access to large amounts of capital. They can move the market at will by actually altering the supply and demand of a certain currency within their pairing. So they usually leaves traceable patterns or imprints something that we can look at and actually judge where the market may go next. So these traces are actually derived from the Elliott wave theory. I'm not going to use some of the other terms because they are actually copyrighted. So I'm going to use the Elliott wave theory, and within the Elliott wave theory, it is stated that for a complete move or a complete cycle, we'll usually have 5 waves like this. We have wave 1, wave 2, wave 3, wave 4, and lastly wave 5. But within these 5 waves, we'll have 3 impulsives. 3 impulsive rise for 5 waves of rise. If it was going down, we'll have 5 waves of drop and 3 impulses of drop. So these are the waves which actually show the manipulation of the market. Within each wave or within each impulsive rise or drop, the market makers will be actually involved in the altering of the current strengths. So within those waves, there is a large amount of contracts, probably 13,000 lots buying within each wave. After booking their profits, you'd see or notice the market actually surging or actually decreasing its momentum. So whenever they actually come out of the market, they will see the market dropping, or if it was going down, actually rising. It shows that there is no more that power that was actually pushing the price up or down. So within doing so, after every 5 waves, we actually expect to see the market reversing. Like in this, we have 3 impulsive rises. At the 5th wave or on the last impulsive rise, we expect to see the market dropping. So like the Elliott wave, will restart the waves like that. Wave 1, 2, up again until we reach the 5th wave at this point. So for each and every time frame, there usually is waves of that particular time frame. So this is a pound against Japanese yen, and it is the one that we are going to use because it has already issued several waves which we can actually show for an example. So the first thing that we need to do is to actually see where the higher time frame waves are at. So if we go on the H4 time frame, right, it's a bit clumsy and it's a bit difficult to see where the waves are at, but we may try to segregate these waves as weeks of rise or weeks of drop or days of rise or days of drop. So let's try to mark these waves, and whenever we are marking an impulsive move, we use rectangles. So in this case, I'm going to pull out my rectangle. So these black traces, these vertical traces, are actually marking a period equivalent to a week, right? So from this point, I can safely say we had this is the first week of rise, right? Then from this point up to this point, we can say it is actually another week of rise, but does it satisfy the impulsive rises on the smaller time frame, right? So we will need now to check how many impulsive rises within these weeks of rise. So going on the H1 time frame, we need to see what is happening on that particular time frame, or we need to try and mark the impulsive rises within one H4 rise. So from this point, we can see that we had a day of rise, right? So a day of rise giving us the wave 1. Let me change the color. We had the first wave, right? The second wave, which is the second day of rise. Then the last day of rise at this point. Unfortunately, from wave 5, we did not have an A, B, C move. It was actually a straight away whereby the market actually continued with its rise. So from that point, we can restart again. We had the first day of rise. Then did this day give us a rise? Yes or no? It did not. Then from there, did we have a rise on this day? No. On this day, no. Actually, the market came, and as you can see, we had a consolidation, another consolidation, and this was the lowest point. Then where did we get a day of rise? We got it from this point going up like that. Therefore, our fifth wave was at this particular point. This is where we had our fifth wave. Therefore, our H4 wave 3-4, actually yes, wave 3-4 is within this. We had 1, 2, and 3. These are consolidation phases, right? So right now, what can we say about this market? We have reached a point where we now want to see where we are going from this point. So we can see that the market gave us the fifth wave of this particular H4 wave at this point, and A, B, and C. Therefore, we are now restarting. We have been issued a day of rise. What are we now expecting? We need to see something like this for us to actually deem the Elliott wave is now complete. So that's basically what we look for whenever we are trying to trade in line with these guys. The market will always repeat this process. It will always do the same thing over and over again. All you need to do is actually to find these particular wave in each and every move and try to mark them for you to have a proper bias of the market. So if you want to learn more on this topic, you need to actually enroll for either a one-on-one or to buy our recorded course. You can do so by linking with us using the Telegram channel in the description box below. On that note, we come to the end of this video. Give this video a thumbs up if it has given you value. Have a good day.